What's up, guys? Welcome back to DCA. Tonight, what we're going to do is talk a bit about the risk metric that we have. So, if you're unfamiliar, the risk metric is simply a machine learning algorithm model that we've created, which, if we zoom out here, identifies for you where market cycle peaks occur or attempts to identify these. No model is perfect, but it attempts to identify these market cycle peaks which you see occurring, in these locations in 2013. So this is our double peak cycle here in December of 2017, and then again here in January and February of this market cycle. So, not only can this model identify for you where the peaks are occurring, but it's also historically been fairly accurate in identifying where the market cycle bottoms have occurred. So we see these times occurring like in January of 2015, here in December of 2018 and early 2019, the COVID capitulation event. And, you can see that even now, the risk metric is quite low. In fact, we're at a 16 on the risk metric. It goes from 0 to 100. So we're not quite at the lowest level we've ever been before. And we have spent some time down in these, low teens and, in the 10, basically the 10 to 20 range. We've spent time there before, but historically, these have been great times to be acquiring Bitcoin. Now, if you go back to say 2014, we were in this risk zone here, this 10 to 20 range, back in October. And at that time, we were trading at around $370 and in fact did continue lower from there. But nonetheless, it was a very opportune time to be acquiring Bitcoin leading into the next cycle. As we all know, Bitcoin went from, like we said, it was around $400 at that time, up to a peak of 20,000. Okay. So when you're looking at the risk metric, this is the first thing I kind of want to talk about. Just because we're down in these lower levels doesn't mean the price cannot go lower. In fact, it can go significantly lower. In fact, in times of, when we're in a downtrend and we're in a continued downtrend, I would expect it to go lower from here. The point is, though, and the reason that you use a model like this is simply because we're not trying to time the bottom. So, we don't know exactly where the market cycle bottom will occur. You know, Back in 2018, at the end of 2018, was it going to occur at $5,000? Would it be $4,000? Would it be $3,000? Perhaps $2,000? We don't know. So that's why we use a risk metric. And that's why, many larger investors and institutional type investors use something. While it could be wildly different in the way it's constructed, this is how they acquire their investments. They do it spread out over a range of prices. Okay. So they don't just typically, this is true, not always. There may be times when they do a lump sum acquisition, but it's like, you see with MicroStrategy, they spread out their acquisition of Bitcoin, and they're doing it based on whatever metrics they are using to determine where the price may be able to go. So that's kind of what we're doing, but we're doing it on a retail scale. We aren't institutional investors. So we have the ability to stealthily enter and exit the market at any price that we wish, as long as, it's a price that someone is willing to buy or sell Bitcoin to us at. So, for instance, Michael Saylor, with all of his Bitcoin, would not have been able to exit the market at $64,000 or $20,000 back in 2017. Us as retail investors, we generally have the ability, even if you're a large retail investor, you generally have the ability to enter or exit the market roughly at whatever price you so choose. So long as someone is willing to buy or sell at that level. So, what we're saying is, when we were at 69,000, if you're a massive retail investor, very likely you could have gotten in or out, or, you could have gotten out at 69,000. Likely the worst you would have done is getting out at, say, 68 or 67,000. So even if you have tons of capital as a retail scale investor, you can enter and exit the market nearly at whatever the spot price at the time is. So the way that we're using this And this is what I want to talk about today, or the way that I'm using this. And again, this is not financial advice. This is simply how I use the risk metric. I don't care per se what the price is at any given time. And if you're new to the channel, I'll just quickly walk through how this works. When the risk metric is above 50, I'm selling my Bitcoin and I'm selling it at increasing amounts as we go above 50. So from 50 to 60, I'll sell a small percent. Then from 60 to 70, I'll sell a larger percent. 70 to 80, etc., all the way up to 100. When we're below 50, I'm doing the same thing, but in the reverse order. So when we're at 50 to 40, I'm only acquiring, 1x, whatever my 1x is. So I look at my, the amount of money that I have sitting on the sideline. And also I look at the, amount of expected income that I have, whatever that may be, or whatever it may be for you. And I assess, over a period of years, let's say, if I'm going to be dollar cost averaging, what would a reasonable baseline amount to dollar cost average per month just into Bitcoin be? And so I assess what that is from this 50 to 40 level. Then from 40 to 30, I say, okay, I want to increase that baseline because I'm suggesting that when we're in this level, we are, acquiring Bitcoin at this level is less risky than acquiring it at the 40 to 50 level. So I increase it by one, zero point 0.5. So whatever I invested. So let's just give a number. So let's say it was $100 a week at 50 to 40. Okay. And personally, what I do is every Friday. So every Friday, regardless of where the price is, I look at the risk metric and I see what range we're in. Are we in 50 to 40, 30 to 40, or 20 to 30, 10 to 20, or 0 to 10? And then what I do is I look, okay, so at 40 to 50, I'm going to invest that $100 we spoke about. Then if it goes down to 30 to 40, well, I'm perceiving this to be less risky than when it was at the 40 to 50 range. And so I'm going to do 150. And then if it goes from 20 to 30, then I'm going to do 200 because I'm going to go up to 2x. And then if it's 10 to 20, now it's even less risky to me. So 2.5x. So now I'll be investing $250 every Friday if it's in this range, which, mind you, the last two Fridays, it has in fact been in this range. So on January 21st, when we were right here at around $37,000, I did a 2.5x investment. And then the same thing when we were there on January 28th. So you can see on the 28th, we were at, let's see, we closed at 37.7K. So again, 2.5x. Now, mind you, the price very well may go lower from here, but I'm making this investment not as a short-term trader. I don't care where the price goes over the next week or 2 weeks. I'm taking this approach based on where Bitcoin may be next time we enter into, a more parabolic phase of the cycle. So for reference, if we just go back to, let's go look at, how this would have played out in the last market cycle. And, so we enter our bear market after, let's say, February of 2018. We enter into a bear market. Bitcoin drops below its 20-week moving average, and we start acquiring according to this risk metric. And you can see that, let's say on February 4th, we were down here in this 30 to 40 range. And so Bitcoin may have been at that time at around, let's see, we closed at 6,800. But what you can see is that over the next year or so, 1 year later, we would have been down about, let's see, we were at 30, around 3,600. We would have been down nearly 50% on our investment. But who cares? Because we weren't doing this, we weren't acquiring here as a short-term trader. We didn't care what the price was at that time. We are acquiring as much of the asset at a cheaper price as we possibly can. And, just take note that we don't know, you can't be certain that we head down to these lower prices. That's why it's, in my opinion, best to be spreading out your purchase of an asset that you have long-term belief in over a range of prices, driving your cost basis down. That's what investing more as you go down the risk metric does. It drives your cost basis down. So, what I have marked here in green, this is the time since Bitcoin has fallen below the 50 range on a Friday, which is when I DCA. And you can see that I've acquired Bitcoin, some of it all the way up at 57K, and then some more at 54K, and more at 53, etc. So I have a range of prices, but two key things are in play here. A, I don't care what happens in the short term. I'm acquiring this Bitcoin for in a long-term perspective. And B, even though I've acquired Bitcoin at 40 and, some even in the 50s, I've acquired much more down in these lower levels because, when I was acquiring in the 50s, it was at this 40 to 50 range. So I was only doing, just throwing the number out there, I was only doing $100 per week. But once it gets down into these lower levels, then I'm doing 2x and 2.5x. So it drives your cost basis down of your more expensive asset and pushes it into the lower ranges. So that when the market cycle comes back around, which, however long that takes, when it comes back around, you're ready with all of this asset that you've acquired at these lower price ranges. So all we're doing is exactly the same thing that we did back in 2018. We waited, we just bid our time. We waited for Bitcoin to drop into these, below the 50 level, and we started acquiring. And we just looked every week, where are we at on the risk metric? And then once we got down into this, basically below the $6,000 level into these ranges. So, from November of 2018 all the way through basically April of 2019, we were acquiring tons of Bitcoin basically at a price of, 4,500 at maximum 4,500 all the way down to nearly $3,000. So even though, we spent a longer amount of time acquiring Bitcoin in the $6,000 range, in the $7,000 and $8,000 range, we spent quite a bit of time, almost a year, acquiring in this range. We really started acquiring a ton of the asset once we got down into the 45 or, basically the 3,000 up to $4,500 range. So right in this area, and we had quite a while to do this from November of 2018 all the way until the end of March or April of 2019. All right. So, and then we just sit on this, and then we sold a bit here in 2019. We took some profits when it was viable to do so. And, think about it. We're taking profits on Bitcoin that we've acquired at $3,000 and $4,000, and we're selling some up here at $12,000. So, a shorter term 4x gain. Then we go back to acquiring once this mini bull market that we had in 2019 sort of comes to an end. We start acquiring again, and we're acquiring now at some at 8,000. And, when COVID occurred, we're acquiring a lot back at $4,000, $4,500 again. And then what are we doing? Once the bull market gets kicked off, you can see once the more parabolic stage of the market occurs, that's when we start to get into these 60 to 70, 70 to 80, 80 to 90. And then finally in, February, the end of February, when we were at 57K, that's when we sold the rest of our Bitcoin. And while we're doing this, we're moving it into altcoins because the altcoins typically go parabolic after Bitcoin has gone parabolic. So in January, January 4th, we sold a lot of our Bitcoin right here at 41,000, moved it into altcoins. And then we kind of sat back. We still have a large portion of it left. And then once we get up to 57K, we moved nearly the rest of it into altcoins. All right. And then we ride those profits. And, as the market cycle went on, we just simply sold the altcoins that we acquired once they started hitting the higher levels of the risk scale. And you can see that if we come over here to Ethereum. So, like I said, we moved into Ethereum, and we're kind of looking at the same thing here. And like I said, we were moving into Ethereum. Now, we didn't get all into Ethereum in January because Ethereum was quite high on the risk scale. So we kind of waited until Ethereum cooled off a little bit back down to the 50 to 60 level right here. And then that's sort of when we started going heavier into Ethereum in February. But if you recall, okay, so in February, we had basically sold the rest of our Bitcoin. So we're looking at February 20th here, right? And we sold the rest of our Bitcoin because we got into this 90 to 100 risk level. And that's February 20th, mind you. And then, and then we're looking at February 24th. Ethereum sort of drives down on the risk scale. So we move a large portion of our profits into Ethereum. And from there, Ethereum goes from 1400. And then we all know it goes up to our peak right here at around 4300. And it hits that 90 to 100 level. There, we sell our Ethereum. And we do this for other altcoins as well. Ethereum is just we primarily went into Ethereum, but this wasn't the only asset we went into. And we do kind of use, I want to talk about Ethereum a bit because we kind of use the risk metric slightly differently for the altcoins. So Ethereum we kind of view as not quite an altcoin, but still an altcoin. And what that means is I do not use the risk metric to acquire altcoins in, bearish times in the market. So what do I mean by that? When Bitcoin is driving below its 20-week moving average and driving below its 50-week moving average, I typically don't acquire too many altcoins. Now, I will acquire some, and this is subjective now. Whereas how you use the metric for Bitcoin is very objective for me. How I use it for altcoins is subjective to where I'm looking at the market and sort of determining where the overall market is at. So there's no way in the world when, we're below the 50-week moving average that I'm going to start acquiring a ton of altcoins, because as we've seen many times, if Bitcoin goes down 50%, altcoins can go down 75% or more. So I'll kind of avoid altcoins when the market is looking, when we're in more bearish times. And like I said, what I'll do is I'll sell my Bitcoin when it starts to go parabolic and drive those assets into the altcoins because they typically go parabolic after Bitcoin. Okay. So when I say Ethereum is kind of an altcoin, but not really, I will use the risk metric to acquire Ethereum in bearish times, but I do it to a lesser degree than Bitcoin. So, you can see that basically here in May, we sold the rest of our Ethereum, and then we started acquiring again, basically from June through July and parts of August, but we weren't acquiring nearly as much. And that's because, Bitcoin has a larger market cap, it's more established. The model is stronger for Bitcoin because there's more data for Bitcoin. So we're more trusting in our Bitcoin model. With the altcoins, they're newer, and there's just simply less data. So in my opinion, the model is less robust for Ethereum and the other altcoins, although we do have more data for Ethereum than many of the other altcoins. And it has a much larger market cap than many of the other altcoins. So we will acquire Ethereum according to the risk metric, but we'll do it at a fraction of what we're doing for Bitcoin. So personally, for me, it's something like 0.6 to 0.3, and then that other 0.1 I'll do into 60% Bitcoin, 30% Ethereum, 10% altcoins. So I am buying altcoins during the bearish segments of the market, but I'm doing it to a significantly less degree. And so that's all I'm doing, guys. It's quite simple. When the market is looking bearish like it is now, I'm just dollar cost averaging every week. And it's really is that simple. There's no, it's not any more complex than that. It's why I don't worry about what's happening with the price. I'm at zero risk for panic selling because I don't really care. I'm just doing what we did back in the prior cycle. Regardless of what the price does, we're just acquiring. We're going to acquire every week. And so these spikes and these dips and the, another spike, etc. These are just, basically blips in the map. They don't really mean much because we're just waiting for our, our next cycle, or if we continue on this cycle, we're waiting for that stage of the cycle. And in the meantime, we're just acquiring. So it's really that simple, guys. That's all I'm doing. And, I'm kind of going light on the altcoins right now. Intermediate level on Ethereum, which just to mention, Ethereum's at a 30 right now on the risk metric. And then I'm going heavier into Bitcoin, which is down here at a 16 on the risk metric. So, in my opinion, Bitcoin is very in a very favorable position. And regardless of whether we're at the bottom, not at the bottom, it doesn't matter. I'm just going to keep acquiring in accordance with whatever the risk metric says, and I'll just keep doing that regardless of where the price heads to. So that's going to be it for this one, guys. If you guys are interested in the DCA Index risk model, it's a free trading view indicator. You can head over to the Discord channel. There's a link to sign up for it there. Sign up for it and I'll send it out to you. So make sure you include your trading view name so that I can send it to you. If you don't include that, there's nowhere to send it to. So you sign up for it there. I'll send it out to you within a day or two. And yeah, that's going to be it, guys. So until next time, as usual, see you.